Thanks. Well, good morning, everybody. Thanks for coming again. Again, I say because I was here in May. No, in March, mid-March. I don't know if you were here. Some of you were here just a few months ago. And unfortunately, as you have said, the story of EMED is a long story. I think the story of EMED has been years of permitting. We're not going to look back to the reasons, but all this is over. I don't know if you know the company or not. I will assume some of you don't know it, so I will go from the beginning. Why am EMED? By the way, you have seen some fact sheets and you will see a new name called Atalaya Mining in your chairs. The company will be changing name in around 15 days in an extraordinary shareholder meeting. Atalaya, it's a name of the first pit where Rio Tinto started, where the mining started. It's about 150 years ago. It was at a certain time the deepest pit in Spain and Europe, and it was a symbol. It's also a high spot, means a high spot. It's a new rebirth of EMED. We just want to start like a new producer. What we have done is we have an asset which was producing. It was run by Rio Tinto. It stopped for a while, so it's a brownfield. It's in a safe jurisdiction. It's in Spain. We have to think that some of these projects that John was mentioned that will probably likely need to come into production to give the copper are going to have difficulties because of the location. And we're seeing this already as you said, mentioned in Zambia. I've lived 7 years in Congo. I know what I mean. We're one of the few producers. And what I mean producers is forget about the permitting issues that EMED had. We are in production. It's in a regional area where there's lots of copper in the area. An asset's the important thing, but if you don't have a team, that's nothing. And we have a good team, as we have demonstrated. We have put together a team that really knows how to operate, has gone very fast. Most of the people are local, and they have the experience. And we have done ahead of schedule and under budget. I will talk about this. It's very unusual to find companies saying under budget and ahead of schedule. Usually it's maximum you can hear is on budget, on a schedule, which usually is not right. But anyway, here we are. And more unusual is to have the money, especially in this market. I mean, we are very lucky now. People will say, well, you diluted a lot in June. Well, I think now we are very clever. We don't have any debt. We raised $95 million from the market and some key shareholders, and we are fully financed to get to 7.5 million tons. What 7.5 million tons is 50% higher than what originally had been planned from the original plans for EMED. And we have a 15-year life ahead of us, and we brought new shareholders. So let me summarize what we have in this place in Spain. We have an existing infrastructure. We will be producing at the end of the year or beginning of next year 37,000 tons of copper. That's roughly around 80 million pounds, so you multiply by the margin, and you will see what will happen if the copper price goes where it should be. We say potential to increase to 9 million. Why 9 million? It's double than we have right now. It's because that plant was already running at that stage, and we're working for that. The cost, C3 cost means including capital cost, including depreciation. Cash cost would be around 175, 170, depends on the exchange rate, which means that even at this copper price, it will still make a very nice EBITDA margin. And as I've mentioned before, we have basically it's all open pit. I will talk a little bit about the potential underground, but it's an all open pit, around 600,000 tons of copper, around 0.5% copper. And if we apply a higher copper price to calculate the pit, we get around 50% higher than that. For those of you that are not familiar with what's 0.5% copper, that's the grades of the deposits that are left in the world. Forget about the grades of the past of 1%. It's not going to happen, which means in the future you will need larger projects, very expensive projects, which at the end will be mining this 0.5%. But we have it in Spain, and it's basically in production. What we had, as I said, is a team. We went very fast. And the first thing we did last year, when I was presenting here in March, At that time, we were basically, everybody was thinking we were going to run out of money. We had just raised $30 million of working capital loan in December, and the clock was ticking. Everybody was waiting for the permits, but we were constructing. We reviewed all the capex, finalized all the permits, put all the bonds together without having to back them with cash. And surprise, surprise, we started construction. How we did that? The team is headed by Julián Sánchez. I've been in the business for 36 years, always in mining, in public companies, in private companies, and in some bigger companies like Anglo American, Rio Tinto, and Tech Cominco. But I have the luxury of having Julián Sánchez here with me, which is a mine engineer, has been project manager of Tasiast, has been with me also in Congo, in this darling project called Mutanda, which is the best operation of Glencore. And David Carrasco, which is here, which is the CFO of a Spanish company, and has been the person that has managed, I don't know how, to keep us running and constructing while we were financing. So, surprise, surprise, we raised $95 million mid-June. And in July, we were producing. How come? The reason is that we were constructing at the same time. The budget for the first phase was around 200 million, but we identified some cash savings, some capital cost saving of around 50 million. We were able to deliver those to 62. People were very skeptical, I have to say. Everybody was thinking, well, everybody is optimistic. The reality, now it's working. We were also able to delay some 31 million that are shown there, which are things that are really not needed to start up. And so we were left with 82, plus some extras that we needed to span to 50% higher production. This is the cash we have right now. So to summarize it, we had to have, in theory, 200 million, and we managed with 120 to get to 50% higher production. And how did it that? With a very short time frame. Originally, the plans of the company was to rebuild in 18 months. In 18 months, a year and a half for the first phase, and another 18 months for the second phase. Well, the 18 months we delivered it in 11 months. So here you are saving like $2 million a month. You are already saving a huge capital costs. This mine had not been running for 15 years, for 14 years. So everything was quite rotten, but we had lots of savings if you could use local suppliers and suppliers that knew what they were doing. So we started blasting already in May to start basically commissioning. We have already started to look at expansions, and in fact, with enough detail to convince the board that we should expand immediately, and they gave us this 50% increased capital costs. They gave us the 50% increase of capacity. They gave us the money for that. And we produced the first concentrate beginning of August. How we were able to do that? We were able to do that because there's a huge infrastructure. We have electricity, we have tailings, we have dumps, we have towns here that are not shown here, we have water dams, we have these power lines. Now think of these projects in the middle of the Andes or in Africa where you have to build a camp, you have to strip, a port. We have a port only 80 kilometers away, a smelter 80 kilometers away, we have houses, we have teams. That's the reason why it's a big difference to invest in this place and to invest in another place. What you would see in the project if you go there is this type of things. We have installations that basically look new. This primary crusher would probably cost $50 million if you had to do it new. It has 30 meters deep depth up under the ground level. This crushing screen, and you see the size of the machines, this is quite big. This is basically was refurbished, the whole thing, take away all the motors, put back again. Same thing with the crushing. Thickeners, all new. Flotation, you can see that's running already with foams. Tailings facilities, this is about 2.5 kilometers. This is a big thing. under this big installation where we store the fine material, you have these feeders. These feeders look new. Actually, they are almost new. We took everything into parts. Of course, we had the concrete. Put back the cables, we had the drawings, we constructed again, and put it back. It looks new because basically it has been reconstructed again. Of course, some things are totally, absolutely new. Flotation, grinding, motors. We have 13 mills with huge motors. Only 4 of them are working right now in the first phase because the second phase, which is in the other part of the building, still needs to be refurbished, and we thought that it was not economic to refurbish. To tell you the size of the installation, this is probably 150 meters long, this installation. It's big. Substation, that was there. We had to change all the transformers, but all the big installation was there. All this reagent plant is new. Control room, modern control room, take away the old one, put it back. Now you can see the mills running, and you can see the size of the building. Filter press, laboratory, all new, of course, new thickness. This is the building. I've just been showing you some pictures of what's inside. We decided to expand with brand new mills. So put 2 new mills. This is this type of 2 mills. I showed this in the AGM in June. There was nothing in the ground. This was 2 weeks ago already. So in June, I showed the place with 0, nothing, and here's already done. At the end of December, we'll have these big mills, which are really big. This will take us to basically doubling the capacity. How we do that? We do that also with a reduction in time. Original plan was for 3 years, 18 plus 18 months. We're doing this in another 12 months. So at the end of next year, we have double capacity. As you can see, we have proven that we have done it before. We're doing it now. That's from what we are considering right now as the main assets, the open pit. We think there's more there. We are not considering any value besides the open pit, but we are continuing to drill inside the pit, basically to define areas that have not been drilled before and to expand this open pit. There, in the black points, you see what's the open pit here, but you can see 2 other deposits that were mined in the past. Right now, we're drilling under the dump to see the extension of this high-grade zone. This was mined by Rio Tinto at 5% grade, so 10 times more than we have right now. And in these 2 places, there are existing deposits which already have some resources, like grades of 1.7 copper, 1 lead, 1 zinc, but this is more complex, and some silver. This deposit, San Antonio, is this one here. And these 2 deposits, San Dioniso, Alfredo, is this one here, which is basically already drilled. We are not considering this part of our reserves, which is not even mentioned in any plans. We're just slowly working towards adding this into our resource base. The area is quite good. There are lots of mines in the area. Las Cruces from First Quantum, Los Frailes now is Grupo México, Agua Blanca, Lundin. There is Aguas Teñidas is in Madalena, which are 2 deposits 20 kilometers away from us, owned by Trafigura. Neves Corvo here, owned by Lundin, and Aljustrel somewhere here. All these projects are in production. Masa Valverde drilled by Glencore. Well, it was drilled by Glencore. I don't know if they will stop now. But anyway, it was being drilled. And we have some concessions just west of our site. This is our open pit. So within this east-west section, there's a lot of area to be explored. There's always a deposit in less than 5 kilometers away. I'm trying to rush to try to get 5 minutes to look at our shareholder base, because I don't think people realize how important this has been. Our market cap is around 135 million pounds. And our share price has been going down, much less, now, as I will show later, than other copper producers, basically in relation to the copper price. But we have 4 strong shareholders, 22, 14, 14. What does it mean? Everybody was thinking that Trafigura was going to take us over or be aggressive. The reality, they have not been. We have a new shareholder called Liberty, which is a Liberty Mutual insurance company, which they don't have anything except a board member. Each of these shareholders have a board member in the board, but for each of their board members, there's one independent board member, which you have the details of these directors in our presentation, which will be shown in our webpage. What does it mean? That 3 of the big shareholders will need to get together to get over 50%, and if they wanted to make any strange thing with the company. So that's not going to be controlled by any of them. Chinese smelter, Trafigura, which is a trader and also miner with presence in Spain, Orion from New York, Liberty from Boston, all of them are looking at the end at dividends and higher price of the shares. We have seen a small re-rating of our share price compared to the net asset value, going from exploration to producer. But we still have to get to the producing stage and our share price should reflect on that, because right now people still think that we are an exploration company, which we aren't. Even so, the lack of liquidity or the low liquidity of our shares, if you compare with others, has helped us in some sense to keep our share price down, but not as down as other. I mean, this was probably a few weeks ago, and you have Freeport down 53, and we were down 20, which is 15. Well, it's not good, but anyway, we have had quite well because of the limited liquidity of the company. I cannot say anything about the supply and demand of copper, but we are extremely bullish. I mean, the excellent presentation of John before shows us. I agree 150% with that. People in markets are underestimating the difficulties of putting new mines into production. It's incredibly difficult. Look at this one close to in a developed place. It took 8 years to permit. But look at the ones in Indonesia, 10 years. In Panama, it's probably now 12 years. But forget about the ones in the Andes with water problems, with electricity problems. The wave will get us. They will catch us, and the demand will continue. There will be no supply. And we see that you need copper prices at least at $325 per pound in order to incentivize and to give any meaningful return to a mining company. And last year I spoke about this because you really need that. The consensus, and we took the consensus prepared by BMO on around 30 companies, and the consensus, everybody was thinking it's going to go up. I think the longer it stays down, like this right now, we will see a wave that, like we saw in 2002 and 2003 with the copper, when it shot up, like we saw in nickel when lots of laterite was coming and suddenly the laterite was not there and the prices just shot up. And we may see this. That's why the important thing is to be in production. If the copper goes up, exploration companies will not benefit. You have to be in production. So that's why we are constructing now in the low wave of the market in order to benefit in the future when the copper prices start going up, funds and investors will start looking who is going to benefit. It will benefit, of course, First Quantum, Freeport, and all this, but also some small companies, and there are not many smaller companies to invest like EMED. I think we have done a good job. I have an excellent team that has been delivering. Not many companies can say under budget. It means we look for our money. It would be much easier for us to relax, get the money, don't save, just spend the time and enjoy the time. No, the reality, we have been running and cutting costs and getting it much ahead of production. Basically, we get it 50% more production in the same time. So with that, you have more details of the shareholders, cash costs and reserves, and this in the presentation. If you want to see it, they will be in our webpage. In any case, I'm happy to take any questions because I think we're running out of time. Thanks.